Essentially, what we're looking at is a macro, change from currency-based finance to commodity-based finance in general.
Okay.
So he who has a commodity is, basically is in good shape.
This show is brought to you today by Lightbulb Podcasting. Are you a busy professional that needs to get more time back in their schedule? If you are a podcaster like me, you have enough on your plate. Why not outsource your podcast production? From editing, show notes, keywords, scheduling, volume balancing, and editing, and creating audiograms, podcast production is another job in and of itself. That's why I use Lightbulb Podcasting. Get phenomenal support at an affordable price while you concentrate on growing your brand. Go to www.lightbulbpodcasting.com today to schedule an introductory call. Put your content in the spotlight.
Are you tired of the 9-to-5 lifestyle? Do you want more freedom to do what you want, when you want it, without sacrificing your current income? Then this is the show for you. Every week, we dive into John's journey towards financial freedom and everything he has learned since 2014. Real estate investing, cryptocurrency, stocks, private lending, foreign residency, tax saving strategies, infinite banking, assets protection, and much more. Now, here is your host, the founder of the Wealth and Freedom Nexus, John Rickgarn.
Good morning, afternoon, or evening, depending on when you're listening to this. This is John Rickgarn, your host, as always, of the Wealth and Freedom Nexus podcast. Now, typically, I always like to bring on additional guests or shall I say, interesting guests to bring on, maybe some alternative investments or alternative investment ideas that maybe isn't so mainstream or maybe others haven't heard about. And in this case, this will be just as much of a learning opportunity for me as it is, or as it will be for my listeners. And today I actually have on Riggs Eckelberry of OriginClear. And this might kind of surprise a lot of people. You've probably heard investment opportunities in, real estate or crypto or precious metals or oil and natural gas are going up quite a bit as we are recording this episode. But this is actually a kind of boring topic, if you will. And this centers around water. And you might be asking, well, how do I invest in water and what's all this about? So with that, I'm just going to pass it on to Riggs to do his introduction and tell us how we can invest in this asset class. So Riggs, welcome to the show.
Thank you, John.
You bet. Maybe just starting off, Riggs, for those that aren't familiar with you, or maybe this is the first time they've heard of you and OriginClear. You can just kind of give us a brief background of where you came from, how you started, and then eventually how OriginClear came to be.
Well, I have, I don't think there's a standard background for a CEO. I think it's
okay.
Eclectic, adaptive person that somehow keeps things going.
Okay.
Elon Musk calls it chores.
Mm-hmm.
So, and there's a lot of chores in being a CEO, but how I came here was basically come from high tech. I had a wonderful run in the .com, had a lot of fun. Post 2000, I was really, I helped get a company on NASDAQ, we sold yellowpages.com. That was a big win. So a bunch of stuff happened post 2000 that was really, I was starting to, I think, ascend to the C-level qualification that I could actually say, okay. And I foolishly said to a fund that I knew, I think I could be a CEO. And to my regret, they agreed.
Okay.
And so rather than being a consultant advising people on wise things, I actually ended up having to do those things. And what they said was, well, Riggs, we're not actually doing tech anymore. We're doing green. And we're launching a company to do algae for biofuels. Okay. And long story short, I have a very smart brother who had some tech in that area. We launched a company. And this particular fund specializes in making raising money in the public, in the sort of the penny stock arena, as a very specialized way of raising money. And we did really well with the algae story.
Okay.
And the one problem, of course, is that we had to have $120 a barrel oil. It was not a business proposition. Well, fracking took it down below 50, and that was it. We used it to basically purify water. And so that's where we ended up. But algae was exciting and fun and sexy, and I was being invited to the UN, this and that, and then water, nothing, dead silence, right?
Okay.
And here's why. People think water is important, vital even, but they don't want to know about sewage. They're like, you know what, that's TMI. And as a result, it's not well supported. The Biden infrastructure bill, I don't know, $1.2 trillion, has only $55 billion for water infrastructure. That's less than 1 year's catch up on our infrastructure problem in the United States. So there's basically a sort of a complacency about water. Nobody gets rewarded for doing water right. And so as a result, our central infrastructure is falling apart. And we spent years trying to figure out how to move the needle and make a difference. And we believe we have.
Okay. Interesting. All right. So yeah, the water, as I'm, kind of centers around algae, sewage, biofuels, alternative to oil, kind of all together. Is that kind of right?
Well, to be truthful, there's no algae involved in the water cleanup. We had an electrochemical way to get the algae out of the water. And used a similar technology to get the sewage out of the water. It was simply a similar process, and by the way, there's a great use for algae in water cleanup. It's wonderful because it absorbs all kinds of things, including uranium and things like that. But we are not specifically using algae. In fact, we're very agnostic, as we'll discuss. We're very agnostic as to underlying technologies these days.
Okay, interesting. So with that kind of, maybe we can take a little further step with OriginClear. Can you kind of expand onto that with the, company and maybe, focus, direction, and, maybe even lead on to how, investors could, or maybe why they should invest in water as a resource, and where OriginClear is going. This show is brought to you today by Timothy Hero with Hero Mortgages. Did you know traditional lenders cap you at no more than 10 rental loans in your name? Many have complicated underwriting processes, and if you are self-employed, even more documentation and income verification is needed. Why not work with a loan broker that can get you the best terms with an unlimited amount of loans for your investment properties? 30-year fixed rates starting at 5.8%. These loans do not report on your credit report, can be done right in an LLC, and can be used for 1 to 30 unit properties or portfolios, all with faster closing times and less documentation than a traditional lender will require. Check out episode number 17 for more info, or go to timothyhero.com to get a quote today.
Well, John, let's start macro. Right now, we have a situation where, runaway inflation, Jamie Dimon claiming that, we're going to have a hurricane. And I think another person I read today says it's a storm on top of a storm. So we have a lot of situations. And essentially what we're looking at is a macro, change from currency-based finance to commodity-based finance in general.
Okay.
So he who has a commodity has got, basically is in good shape, which is going to be a tremendous realignment for all of a sudden. Gabon is going to be a very powerful country because they have, I don't know, lithium or whatever. In other words, countries that didn't have good currencies but have good commodities all of a sudden matter. And so that means in general, there's basically in an inflationary situation, the only safe ground is not risk assets, but hard assets, and hard assets that earn residuals. So you want to make money from your gold is great, but I've got gold in my safe. So what? There it sits, right? So you want assets that produce and are yet not likely to lose value because of sentiment or markets. Real estate is, for example, is a great asset, but there's a lot of value add from the market's perspective. How much utilization does a commercial mall have, right? Or things like that. And of course, we've seen how that can go south. So you want to look at an asset that is solid and can yet make money. And then you say, well, what about oil? The problem with oil and gas is that it's highly political. In fact, investments being withheld from the oil patch because investors are not very comfortable with the politics involved. They're like, you know what? They could make us close our wells any day now. It's not, right? So oil is very fat right now, but it's politically risky. Gold and precious minerals. Okay. Lumber was great, but now it's fallen apart because finally the housing boom's tapered off and the price of lumber has fallen off a cliff. So these are all assets that the reason why they're difficult now is because they've been around for so long and they're kind of at their top. And so just like the price of Apple stock, there's a time when it comes down again, right?
Yeah.
Now, water has never been an investable asset. And the reason is it's always been centralized. Big, the government will take care of you. We'll build these big central plants and we'll handle everything.
Yeah.
That contract has fallen apart. Increasingly, businesses are being told, treat your own water. We can't take for example, breweries, which have a lot of effluent, very low they're not toxic effluent, but there's a lot of it. Typically, they have a big problem because when they expand, they start overwhelming local municipalities. Municipalities say no. And one particular brewery started having to truck its effluent to another county. And
oh, geez.
And so then they're stuck with, we're just going to have to treat our own water because the cities are saying you can only give us treated water. Now, this is not a problem that consumers are aware of because, frankly, the cities they can't stop taking care of what's you're flushing down your toilet, and they're going to have to take it. So there's a minimum level of service that the consumer is being served with, not well. Coming water into my house, I have to filter it, you know that. But nonetheless, there's a breakdown of central infrastructure that because it's overwhelmed. And what makes it worse is that there's been a big migration in the last 2 years. The numbers just came out. New York lost, I think, $20 billion worth of taxable income last year from migration. So a lot of migration to secondary cities, and which is good. And it's healthy because it kind of redistributes everything. But that's even, you move to a place like Clearwater, Florida, they're not geared up for a massive influx. They're accustomed to a certain level of water treatment. And so you're overburdening rural, semi-rural, exurbia type locations. All of this adds up to a perfect storm for water and an opportunity for private water treatment.
Okay.
Now, what I mean by that is helping businesses and industry and agriculture cope with the problem of treating their own water, which is a growing problem. And these businesses also learn that it's a way for them to limit water rate increases, which are inflating it, in over a 10-year period, they end up 3 times core inflation. So that's not great. So that's a good risk management for the business. Also, they can recycle, therefore use the water they paid for more than once. In a brewery, that means, for example, that even just using it for washdowns and steam vessels, you can reuse about 50% of the water in your own plant without even making beer from it, because not everyone's going to love beer made from effluent.
Yeah, exactly.
Not that it's bad, but
maybe after the 10th beer, they won't notice it or something. But
what depends on the beer, right? Sometimes it might be an improvement. But anyway,
very true.
That organic thing I can taste in the back. But anyway, so it's a good proposition for businesses. But here's the problem. I've got a brewery. I make beer. I invest in, brewing vessels and all that stuff. I don't have capital for water treatment. That's not my business. So where's that $1 million going to come from? I got to go to the SBA, this, that. And as a result, we learned this because we built a business around serving those people. But we noticed in early 2020, there was a tremendous backlog of unfunded prospective jobs, more than $45 million worth of jobs just stacked up there. And what the heck is going on? And because it was COVID, COVID was great for taking a look at everything a second time. Let's look at our business model.
Yeah.
And we went, you know what, we got to do something. And we figured out, well, why not help with the finance, right? And so fast forward to late 2021, we had built a fintech that basically closed the loop and said, look, you're a brewery, sign here, you'll get your water system fully maintained. It's water as a service, paid by the gallon, just like you're used to from the city. It's a fully turnkey solution. A box will show up in your brewery and put it in the corner and you'll be fine.
Okay.
And that we called Water on Demand. That's our program.
Okay.
And first time investors can invest in a water system the same way they can invest in an oil well, i.e., Well, there's this thing called, many of your listeners know about master limited partnerships in oil.
Mhm.
That's been around since 1981. Today, it's a $300 billion market, about 60 of these MLPs. And what they are is a basket of properties, mostly pipelines, but also oil and gas. And because they're a basket, there's a certain amount of risk management, as long as you don't do that mortgage subprime. Trading, right?
the messy stuff.
if you steward it right, then you've got a package of good properties. And if one fails or one gets close, so what? And so we did the same thing. We built these water on demand units, and we've been accumulating capital in those with the idea of, okay, now we're going to devote that capital. And because the machines remain, remember only selling the service, therefore they remain owned by us. They're not leased. They are they're deployed on a use basis. Therefore, the asset remains with us, which gives the investor some security. It becomes an asset.
Okay.
So you've got treated water, and our investors get 25% of the net profits from this pay-per-gallon model. And it papers out beautifully. We've done the numbers, and it generally, and you know this, services are generally more profitable than product sales.
Yeah.
Microsoft learned that with Office. And, I pay $19.95 a month, whatever it is, for Microsoft Office. It's much more than I would pay for what I used to pay for it, but I get much better service. All the updates, and I got the cloud, and I got this, I got it. It's basically they are my little IT department. In fact, we don't even, what IT department? We don't even bother. Microsoft does such a great job for that $20 a month that it's well worth it. And that's how basically any kind of service pays off, both for the service provider and for the user, because it takes the whole problem off the plate. Thank you very much. And if the water's not clean to a certain standard, I don't pay at all. Right. So what we've done is we've basically taken this water on demand, and started to ramp it up. And we've actually begun to already roll it out as its own company. It's going to get crowdfunded ultimately onto the NASDAQ, with OriginClear being the mothership. And in fact, in the middle of all this, OriginClear made a transition from being a company that was trying to bulk up with more and more and more value. But in the end, we started being like The Sound of Music, too many kids and one of them gets neglected, right? So now the new model is take all those valuable properties and launch them using proven crowdfunding techniques. And that's been done amazingly successfully. So not only is water on demand set up as a pure play, and here's the beauty of it. Water as an asset has not hit a top. It hasn't been anywhere. It's the beginning of water as an investment. Nowhere in the world can you invest in water as an asset. This is a first. Okay.
Interesting. As far as you had mentioned, like obviously the investors and the company, it's a pay for use or pay for the gallon, and the box, if you will, like you said, it's kind of in a corner there. I'm assuming, since the ownership is still retained by the company and then ultimately the investors, there's probably some like depreciation or maybe K1 schedules that can get some tax savings as well for investors, or how does that work?
Well, yeah, the short answer is no. And the reason why is we started doing that in 2020. We're like, okay, let's, John can own a brewery system in Folsom, California. The problem with that is that there's a spider's web of regulation around investing in hard assets in this country. And so it's very hard. It's easier for people to invest in a basket of these assets. Now, what we do instead of delivering the K1 or tax benefits, depreciation, all that good stuff, is we reward the investors with equity. First of all, piece of water on demand itself. So the first 10% of water on demand, anti-dilutive, is being handed out to the first $20 million raised. We've already raised almost $3 million. So let's say $17 million to go. That investors will get 10% of that. And then after the first $20 million, that's over. And in addition, they get equity in OriginClear, the mother company.
Okay.
150% of their investment plus double warrants. So we've chosen to be very, very, since OriginClear gets all the benefits,
Sure.
we give you a chunk of OriginClear, basically.
Gotcha. Okay.
So, let's compare, for example, to cell phones, right? Now, cell phone tower investments are great, but all you got was you got the stock play, right? So, unless you were a cell phone tower, you owned the underlying land and you made money from the lease or whatever, you were a pure investor in a cell phone tower business, you played the stock. Well, here we have a chance to get a residual asset that you can enforce with the UCC to get that residual, and stock and warrants for the upside. So it's a great hybrid.
Okay. Interesting. Just kind of looking over here, Riggs, as far as from when OriginClear started to now, has there been like any kind of metrics you can give us, like when you started, as far as like the pay per usage, I don't know, businesses were paying, 2019, there was 1 million gallons of usage a month or whatever a number is. And that's grown like 25% a year, or is there been like 500 boxes going out year one and that went up to 1,000 boxes, or, what has the growth or metrics been looking like for, investors that are interested in this?
Well, what we've pioneered is we have a division called Modular Water Systems, which we built from scratch in 2018. And right now it's running about $1.5 million a month in sales run rate. And it has patented technology for these water systems in a box, which is what you want, A, because you can repossess them. They're not like concrete in the ground.
Okay.
And B, they're in the corner, right? They're not obtrusive, and they're like plug and play. So what we've done is we've built that business on a conventional basis. There's 4 initials you should know in the water industry: is DBOO, design, build, own, operate. And so what we've been doing is design and build. And last year, our sales tripled in design and build. So we've had a big expansion in that area. But the problem with that is that your sales, water systems is like real estate. It takes a while to get it built.
Sure.
For example, in the middle of summer last year, we made a big $5 million sale to a power company. Well, that $5 million sale is going to take 2 years to deliver over time. And that's only then can you count the revenue.
Okay.
So as on the, generally accepted accounting principles, revenue is recognized only when you deliver milestones, right? Mm-hmm. And so you make the sale, great, got the money in, part of it, and you keep getting paid. So, for example, we tripled our sales last year, but the revenue numbers stayed flat. Now it started the wave started to break. So Q1, we had a 50% increase in our recognized revenue, and it's going to keep growing. So that buffer effect is going to catch up. So our conventional business, DB, is very good. Now, we're now stepping into OO, own and operate, to make this water service work. So we're building that. This is what our investors are paying for, is the development of this new business. So what we can say is, look, we have a great reputation building systems. We really know how to do that. Now we're stepping into the finance game, and obviously we have been recruiting some outstanding finance people, world-class finance people to run that. And it's a challenge, but frankly, it's harder to build a water business than it is to build a contract management business, frankly.
Okay.
So basically what we're talking about here is water on demand sits at the intersection of the client and the builder. Because one of the decisions we made was, sure, we got a growing business over here in design and build, but we're going to raise money far faster than we could ever build those systems. We're going to quickly overwhelm our resources in Texas and Virginia. These are the current operating centers. So what we decided is, look, water on demand is going to always, let's say you are in Atlanta, Georgia. You've got a housing development, it's off the grid. You want to connect it to you don't want to connect it because it's $5 million. Instead, you want to just put in a self-maintaining black water system. So we go ahead and we say, okay, we'll finance that. And we find a local regional water company to build it and maintain it. So the person
Okay.
showing up to maintain it, we don't have to fly somebody out from Texas, local resources. And so what we decided to do is give up, and this is a huge departure from the rest of the industry that tends to want those hardware sales, right?
Sure.
Like, no, we're going to go ahead and give them away to local players. Now, what does that do? That's kind of like our supercharger network, right? In other words, all over America, people will have alliances with us who are getting bluebirds. Whoa, we just got a job from OriginClear, fully funded, that to build a system and maintain it. We didn't have to sell it. And furthermore, they are a source of deal flow. I was talking to one of my longtime partners in California, and I told him our new business model, and he said, listen, I've got a golf course in San Diego that it is ready to go, but they don't have the $3 to $4 million to make it happen. Can you do it? I'm like, yeah, okay. So it's a source of business, of deal flow, and it's also a way to get those things delivered. So now we can run massive parallelism. We can have multiple projects going where we're financing, and we have certified partners on the ground building and delivering, and we license our modular water technology to them, and that standardizes the fleet.
Okay.
Beautiful thing, because now we get licensing revenue to our division modular water. It's all synergistic.
Okay. So in many ways, I guess how I hear that's kind of like a franchise model where, you go to one McDonald's in some place and go to another McDonald's, it's the same product, the same standards, shall we say, from one McDonald's to another. There isn't any variance. And that's kind of where the licensing, almost like a franchise, comes in to make sure that they're, all the same, so to speak.
Yes. I mean, obviously it's not literally a franchise.
Well, yeah, I was just trying to
but you're absolutely right.
These are comparable.
These have integrated. They're basically integrators of your technology, and they're granted a license for that specifically. This gets because again, here's the problem with water or any other industry. One company cannot transform the entire industry. It takes a long time. I can think of one that has, which is Tesla, an amazing example.
Sure.
But I think Elon is. I love people who say Tesla's going to go bankrupt. I'm like, yeah. You go ahead and bet on that. Yeah. Good luck, right? But in general, what you want is a group. You want a movement.
Okay.
So rather than us trying to sort of finance and build everything, and we sort of stay in our little lane, and then everybody else steals our model. Instead, we go, no. We'll be finance, and we'll be basically the MLP, right? Because MLPs don't do their own drilling or pipeline building. They just bundle the packages, right?
Sure.
That's all they do. And so if we just manage the MLP, then we will be the investment market for water as an asset. And this water will be paid every single gallon paid for, which, by the way, takes us down the road eventually to being able to tokenize that water.
Okay.
In 2018, I tried to start a crypto in water called Water Chain. But the problem we ran into was there's no standardized way of pricing water. It's all over the place.
Sure.
And as a result, there's no water market. But once you've got water being paid for by the gallon, now you've got a standardized price. And eventually you can start having, through tokenization, you can start having transferability of assets. Like I decided to move my digital bond, my water on demand bond over to you because it's tokenized. I'm like, I just do a little address change, boom, done.
Sure.
And hopefully you weren't a thief. And then but putting aside the horrible track record we have from crypto transfers, still, it's a very efficient thing. Now, where we want to go is we want to then build more water on demand set hubs in financial centers, Singapore, Dubai, London, Tokyo, that then fund water systems for their area. And we'd prefer to have a financial network than to have a water equipment network that we built. Now, here's what's cool. We actually have a water equipment network because we own the machines that were built by someone else, and we own the contracts with the clients. That kind of puts us in the driver's seat.
Sure. All right. Now, just kind of listening through all this, if, even myself, like I said, I've been kind of looking at this investment for a while. If there's any listeners out there that are maybe interested in learning more or wanting to invest in this, do you have to be an accredited investor to invest? And how does someone invest in OriginClear?
Okay, right now you do.
Okay.
However, we are in the middle of filing a Reg A that's native to water on demand, because as I told you, water on demand is going to go public. The best, most organic way for a company to go public these days is through Regulation A offerings.
Okay.
So the great success story, a company called Knightscope, Start Engine platform, they did a series of Reg A's. Now they're on NASDAQ.
Yeah.
I don't think they did any Reg D's. They just did all Reg A.
Yeah, I'm invested in them as well. I don't think they did any with Reg D's, like you said.
So, and they really showed that now you can take a company and just Reg A it. Now, what we'll do is we'll roll out the Reg A. It's going to take however long it takes. Call it, let's say by August, we'll have a Reg A up and running. I can never tell how long it takes for the SEC to approve these things.
Sure.
But whenever it's approved, then, so in the meantime, I do a Thursday night Zoom briefing where basically I tell everything I'm legally allowed to say about the company. I show spreadsheets and numbers and this, and then I interview people and whatever it takes for people to really get a glimpse into what's happening every single week. It's Thursday night. And you just go to OriginClear and you'll get an invitation to join. Get on the list, and because you'll then get your chance to invest Reg A. If you're an accredited investor, then you should invest now. And here's why. The multiple of OriginClear stock that you get is currently very high, but it's designed to drop, obviously, as the thing matures. People are getting rewarded for being early because, as you kind of implied, John, we don't have the numbers yet. We still have pro formas.
Sure.
And so people are taking, they're not taking an asset risk really because the hardware's there. If it's either cash or hardware, it's all segregated. Mm-hmm. And in public companies, you really have to segregate it. You can't pretend. And so there it is, either cash or hardware. But, there is a business risk. And as a result, now we've been public for 14 years. I think we've shown that we can survive, but nonetheless, there's a risk. And so we currently give 165% of your investment in OriginClear preferred stock that you convert when you want to. So let's say the stock price goes down, and in development mode, the stock prices don't go up. They start going up once the numbers really start to kick. As a result, you get the price later whenever you convert out of preferred, which is a protection on stock price. And that 165% will drop very soon to 150, and then all the way down to par at 100%. Okay. So it's, people should go ahead and just click on the green invest button on originclear.com. And they can talk to the amazing Ken Berenger, who designed this whole program with me. He's one of the brilliant guys. And he just will do it. I'm wonderful. He's better.
All right. Sounds good. Hey, well, yeah, that's definitely, definitely interesting. And I think, like you said, water's, needed in pretty much everything. And I don't know, I think when, the people of Flint, Michigan kind of comes to mind as far as when, bureaucracy and government entities don't do the best job, shall we say, of providing for the citizens. So I think if there is a partnership, if you will, of investors and companies like OriginClear and like yourself that can help maybe bridge that gap, I think that's going to be, beneficial for everyone involved. If anyone else is interested in learning more, what's the best way to reach out and learn more about OriginClear?
I'll tell you in a second, but I wanted to mention, following up on your last thought.
Okay.
Right now, as I was, talking about the migration, from the big city centers, mm-hmm. and people migrating out to lesser served areas, which makes the problem even worse. And what we realized is, and we started getting a lot of business on our conventional thing from housing communities, housing developments that wanted to set up, you get 50 acres away from sewage is far cheaper than the stuff that's fully connected, right? So yeah, they wanted to do that. Hotels that wanted to purify the water, travel stops, RV campgrounds, mobile home parks. We started getting a flow of business, and we realized that people really are looking for self-sufficiency in water. It's becoming a big thing, especially with the migration, creating all kinds of inflow. I think Florida gained again $32 billion this year or in 2021 in taxable income.
Yeah.
So there's a ton of migration in. DeSantis is a very happy man. Ton of migration into the country, into the state. And as a result, there's a lot of demand. And so we've actually created a sub-program under Water on Demand called Water for Us, Water Number for Us. And that specifically addresses what we think is going to be the killer app for investor-funded water systems, which is to build self-sufficient human communities. There's going to be more and more of that. Preppers used to be the weirdos.
Yeah.
Right? I was like, I'll never do that. Mormons have to have 5 years worth of supplies. Turns out the Mormons were not stupid.
Yeah.
So anyway, to answer your question, all people have to do is go to OriginClear.com.
Okay.
And click on the invest button, and they will be able to connect right away with Ken Berenger, who's an absolute brilliant man. And he will, if you're accredited, if you're unaccredited, go ahead and get on the list.
Okay.
If you click that button, it will take you through the same, funnel, but it will take you to sign up for the CEO briefing, and you'll get to listen to me every week, which is really good. I mean, we have people who become regulars because it's very candid. We answer every single question. I think we're the most transparent public company in the United States. And so that's really the way to go. Of course, we welcome, join us on Facebook, join us on LinkedIn. That's all good.
Okay.
But the primary way really is that CEO briefing.
CEO briefing. Okay. All right. And for all those listening to this or watching this, I will have all the resources mentioned in the show notes. So you don't have to hit rewind and find a pen and paper and try to pull it up on your mobile device and whatnot. So with that, maybe just in closing, Riggs, anything I maybe should have asked you or anything else that you want to leave for my listeners as in regards to this asset class and this investment opportunity?
John, for a long time, I was I'm used to disruption, and I was trying to figure it out. I couldn't figure it out. And what I realized was it's very hard to disrupt actual physical stuff. But how did Airbnb disrupt? They disrupted by not owning the physical stuff.
Yeah.
Uber by not owning the cars, right? So if you can abstract physical ownership and just do the financial transaction, then you get disruption. And this is something that I'm not that smart. I really had to like beat our way to it. And I have to credit the COVID for having forced us to just like, okay, we got to figure this thing out. So long story short is we do have a fintech disruption here. We're super excited that we're going to make a big difference because think about it. A whole new cohort of investors is going to come into water that hasn't been allowed to invest, which is America's Main Street investors. So this is going to have a tangible effect, and we welcome your listeners to come on board and enjoy the fun and make a difference with the state of water in the world.
Sounds good. All right. Well, yeah. Thanks again for coming on the show, Riggs. I actually learned a lot as well, and I think I'll be definitely doing the invest button. I'm unfortunately not an accredited investor myself either, but definitely looking forward to that Regulation A opportunity that you spoke about. So.
And, maybe someday you'll become accredited because you do so well, right?
Yeah, well, yeah, I'm getting closer. I'm doing more of on the net worth side, but yeah, I know there's other loopholes of, take your whatever Series 8 or some other things that they have available now. It's like, I don't know. I'll just keep building along, I guess, so to speak.
I think it's fundamentally unfair that only the 1% get to invest in these things.
Yeah.
And thank God Reg A has come along and has democratized.
I agree. Yeah. And it was kind of funny. I've had numerous conversations with other investors. And last year I was at a summit and I kind of had to laugh because I gave them the extremes that I knew of one opportunity. It was a minimum of $1,000 to invest, but you had to be accredited. It's like I myself, and I know many people, I got $1,000 in my retirement account. I can easily invest in this. And then the flip side, about a year and a half ago, I learned about one and, oh yeah, you don't need to be accredited. I'm like, okay, what's the minimum investment? Oh, $200,000. I'm like, that's more than my entire retirement account. That's even if it wasn't cash, which it wasn't. So, 1,000 on one end, 200,000 on the other. It's just, I don't know, really ridiculous what the SEC has set up, but that's a conversation for another time.
That's for sure.
Yeah. So, all right. Well, I appreciate your time and your insight and your knowledge, Riggs. And for all my listeners out there, be sure to hit that subscribe button and reach out to OriginClear to invest in this new opportunity.
I have a shortcut, which is oc.gold/CEO. oc.gold/CEO. Just put that in your browser and you'll get the CEO sign up, the briefing sign.
All right. oc.gold/CEO. And that will be in the show notes as well for all you listening. So, all right. Well, thanks again, Riggs, for coming on. It was a pleasure to have you on the show.
Thank you, John. I enjoyed it myself. And you have a great rest of week.
You as well. Thank you.
Okay. Bye-bye.
Thank you for listening. Be sure to share, rate, review, and subscribe on your favorite podcast platform. For more updates, check out www.wealthandfreedomnexus.com. Remember, nothing on this show should be considered tax, legal, investment, or professional advice. This show is produced solely for educational and informational purposes. Please consult an appropriate and licensed tax, legal, real estate, or business professional for specific advice for your situation. For distribution or publication rights or media interviews, please contact the host.